Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some of the stocks on the move today in Europe. I'm Stephen Carroll with Lizzie Burden, and we're joined by Bloomberg reporter Chloe Mellet. Chloe, good morning. Let's start with pharmaceuticals and GSK raising its profit and sales outlook. What's driving that?
Well, yeah, so they upgraded that guidance by quite a large margin, and also the quarterly EPS beat expectations by a long shot. A lot of that was due to sales, really strong sales of HIV and immunology medicines in particular. Vaccines actually also did better than expected, despite some pharmaceutical rivals saying that there was a lower vaccination rates, specifically in the US, that were weighing a little bit down. But for GSK, it seems that division is still doing quite well. This was the last quarter of Emma Walmsley reporting as CEO, and this is obviously quite a strong set of results to go out on, so I'm sure that she's pretty pleased by it. The new CEO, Luke Mills, will be coming in January, and although he is picking up a company with very strong growth, there's a few challenges going ahead. So there's been a lot of investor pressure to update the pipeline of new medicines for GSK, because a lot of its top sellers, specifically in HIV, are facing generic competition. And also GSK hasn't managed to strike a deal with the Trump administration on tariff relief like AstraZeneca has managed to do. So there's a couple of things that the new CEO will have to focus on when he comes in. But so far today, at least, it seems that investors are reassured from this set of results, and they seem quite convinced that GSK can deliver the £40 billion in sales that it is targeting by 2031.
We've also got to talk about Mercedes. It's one of the best performing stocks this morning. Confident that its cash generation will be strong ahead. Chloe, what are we looking out for on the back of the car maker's earnings?
Yeah, so it's not super often that we get a really positive update like this from a European car maker, but Mercedes, as you said, is moving much higher this morning after confirming its outlook and announcing a €2 billion share buyback. So as you mentioned, that shows that the company is confident in that ability to generate cash, and that's really helped to reassure investors that the worst might actually be behind for Mercedes. It's the only major German automaker that hasn't cut its outlook in recent weeks, but it's obviously not completely immune to the challenges that are faced by Porsche and BMW and others. So it's obviously still dealing with the cost of US tariffs, which obviously is a key market for large SUVs in particular. And China really is the main concern. So sales in the country had their worst quarterly performance there since 2016. And that's because demand for luxury cars is falling, and cheaper domestic manufacturers like BYD are gaining more and more market share. So it's not out the woods just yet, but that is somewhat reassuring today's update from Mercedes.
Yeah, indeed. Shares up 5.7% at the moment. Let's go to Norway now. Softening energy prices hitting profits at Equinor.
Yeah, not so good news over in the energy sector. So the third quarter earnings dropped because of those weaker oil prices and also weaker trading profits. So we knew coming into the earnings season that oil majors would face pressure because oil prices over the third quarter were lower because of OPEC ramping up those supplies. There's also the fact that volatility in the energy market calmed down a little bit as well over the period, which means that there were fewer opportunities to profit from really large price swings, which explains those weaker trading profits. So we have also Shell and Total Energies reporting tomorrow. So we'll get a bit more detail on how much those companies have been hit by those softer oil prices and whether they've been able to mitigate that. Of course, the key thing for those companies is whether they're able to maintain their shareholder distribution, because the ability to withstand those commodity pressures and keep up those payouts is really key to their appeal.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.